I'm pleased to introduce our first panelist. He's an entrepreneur with a background in finance and business. He managed a blockchain consulting and training company for financial institutions in France. Director of Business Development at Cambridge Blockchain. Welcome, Nadeem Bakshi. Our second panelist, he has more than 25 years of financial experience leading positions in several organizations. I would like to welcome on stage the Assistant General Manager at Biblos Bank, responsible for organizational support, operations, and technology for Biblos Bank Group, Mr. Rafour. Our third panelist has been the Executive Director of the Banking Department in the Lebanese Central Bank for the past 25 years. He is a member of several executive committees, namely Banque du Liban, Arab Monetary Fund, and Association of Banks in Lebanon. Most welcome, Najib Shuqayr. Our fourth panelist, he's the co-founder and CEO of MEA, where he is working on building the tools to help users again regain control of their digital identity. MEA, named one of the best password managers of 2018 by PCMag and Apple, was the first Lebanese and Arab startup to be on stage in San Francisco, California, being part of TechCrunch Battlefield competition. Most welcome, Antoine Jbar. Our moderator for this panel is an experienced CIO and technology executive with more than 30 years of experience in the US and the Middle East, the Chief Information Officer at AUB, where he is leading the digital transformation of the IT department into a strategic partner with the academic units. The stage is yours, Dr. Yusuf Asfour.
Okay. I know we're in the last panel between you and lunch, so we're trying to keep it exciting and keep it on time. We're talking about today about the digital identity and how we can solve it. And to help us frame what that problem is, can I ask you to frame what the problem is in your mind?
فينا نحن وعملنا الأول تكاير طيب نعمل فورمات لكن ماشي تحت على ناس
Do you prefer to speak in Arabic or English? Okay, we'll start now with English. So, after the Civil War in 1993, when we came to the central bank with the governor, Mr. Salami, our goal was to increase access to finance and increase financial inclusion. Because at that time, the total asset of the banking sector was about $10 billion US. Total loan were about less than $3 billion and distributed to only 32,000 clients. And only in 1993, 32,000 clients in the Lebanese banking sector had access to finance. Today, the total asset of the banking sector is about $240 billion US. I have in the credit registry 1.5 million clients. The active one are 1 million clients, and the total loan to the private sector and the banking sector is about a little bit less than 70 billion. At that time in 1993, there were no retail loan, no housing loan, no car loan. There was only corporate loan. So mainly the bank were lending to big names and to big companies. So our target was to increase the access to finance because it will increase the job creation, it will increase the consumption and lead to the increase in the economy. In 1993, just to let you remember, the GDP was about 7 billion. Today we are about 55 billion. So how we can do it? First of all, you have to give confidence to the banking sector. That's why we cleaned the banking sector by the law of merging and acquisition. We reduced the number of banks, especially the banks that had financial problems. So big banks took most of those weak banks. And then we pegged the Lebanese pound to the US dollar, and we worked on the financial infrastructure with the payment system and the credit registry, because you cannot lend to someone that don't have a credit history. We call it thin file. And then we gave some incentives, mainly from the reserve requirement and then from direct loan. But although we have a huge banking sector, which is about 5 times our economy, and we have about 1.5 million clients in our credit registry. Credit registry is Central de Risque. So you all know Central.
If you can tie us back to
So I will go back. So we still have a problem in financial inclusion. Financial inclusion is the number of adults that have access to financial services that are supervised by the authorities. We still have a huge problem in financial inclusion. Only 45% of the adults in Lebanon have access to the regulated financial sector. So we created a small committee in the Central Bank Financial Inclusion Committee and a task force with the Association of Banks to see what's prevent banks from going to small amount accounts to be able to go in the rural areas. The main obstacle was the cost of compliance. The cost of compliance is a huge issue. So what we're working on today with my colleague Raful and other partners from the banking sector is the digital ID. I already have a digital ID in the credit registry, public credit registry, Central de Risque, which include about 32 fields. And if we have a tiered KYC is the application that you fill about your customer. It's know your customer application. It's for compliance. It's for anti-money laundering, etc. So the idea was to have a tiered KYC that's related to the amount of the account. For small amount accounts, you don't need more than the ID, the telephone number, and the address. So as long as the amount increases in the account, you add more information that you need. So we're working on this tiered KYC to be able to have an eKYC extracted from the digital ID to this eKYC. But to have it, you need to have a unified database. Unified database will create, we have the cybersecurity problem, the digital literacy problem. So here we can learn from our colleagues, especially Nadim and Antoine, how we can protect, because of course all of you heard about Equifax cybersecurity breach.
So to summarize, what you're trying to say is that, if I understood it correctly, to give access to everybody in the world, in Lebanon, equal access, we need to build a digital identity that has lots and lots of private data, probably at least 32 fields. There are issues of privacy and security. And this is to deal with all kinds of compliance issues as well. Raful, can you, what else are you using digital identity for? Are there any other challenges that you're seeing with all that?
Well, having a digital ID is a big challenge. But we can take it one step at a time. So by collaborating, all member banks, we do that in a technical committee in the Association of Banks, and collaborating with the authorities. We had a couple of meetings with the Minister of Interior on how is the national ID and how much data can we read and rely on, and collaborate with the central bank. Probably we can get to a common ground where we can get the minimum criteria to at least vet a person that is a real person and that's his real data. So I think if we do that very minimal, we can say that this is a minimum vetting of the person ID, and from there we can do very small transactions, and we can onboard people quickly. And that's where we look at the universities, where we could probably, if the university gets into a consortium with us, we could take their data, for the student data, and onboard the student much quicker, because the financial risk of a student is very low. So we can onboard him quickly by just reading your data in a secured way. And uploading that to our database. So, but when it comes to more complex financial transactions, bigger financial contracts, at the end of the day, you're going to ask the client to come in person, you're going to see him in person, you have to experience him, sit with him, build a relationship with him, and then at the end, make him sign on paper. So the electronic transactions that has been issued, it still needs a lot of directives of how to implement it. Defining the signature is a PKI signature that nobody uses today because you don't have yet a certification body in place in Lebanon. So it's going to be very complex, but if we start with the law and start with some minimum actions, we can probably do a lot of things that has low risk. We can pretty much keep the digital transactions moving at a lower risk.
So if I get this right, to provide access, as Nadeem was saying, and we need to collect data, we need to build a relationship. There's a whole vetting process that goes along that's very complicated. We're collecting all kinds of private information. You're asking for student information now. So the question is very sensitive information, very complex process, very required for compliance. How do we fix that? I think part of the discussion we had earlier was blockchain is one way to do that. Nadeem, you had some thoughts about that.
So, just to follow up on what Najib and Raful said, I'm going to have try to take a step back, try to help everybody here understand what digital identity is and the different ways that we have of establishing it. Today there are three ways of establishing identity online. The first one, and Najib was talking about this, is the traditional way, the traditional forms of identity like social security number. And these are growing more and more insecure. We can think of the Equifax hack a couple of years ago in the US, where 150 million Americans got their social security number stolen, and they cannot do anything about this. So there's a much higher risk in regards to that. The second form of identity is the digitized form of the traditional identity. And here we think of these centrally state-owned databases. Like, for example, a central bank owning all of the digital identity of the country. And here you have many examples, the latest of which in India, a company owned by the government of India called Aadhaar, owning the identity of 1.1 billion people. 135 million of them saw their identity leaked online, and the other billion saw their identity on the dark web. So these centrally state-owned databases are becoming a honeypot for hackers, and there is a very big concern in regards to that. The third form of identity is the brokered identity. We can think of Facebook, Google, these institutions to which you give your identity away, so you can have a free service. And these are a real problem, because first of all, you don't own your identity, and this is a big problem. Today, in Lebanon, we don't own our identity, and we need to solve this, and the central bank, alongside the ABL, are working on that. You don't own it, and then you can have problems like what happened with Cambridge Analytica and Facebook and other things around Facebook, and this is a growing concern. So we start thinking, okay, the three ways today that we're working around digital identity are not secure enough, and they're actually not working anymore. So we need to find a suitable way to do it alongside technology, and this is where blockchain comes along. Blockchain is not the answer to everything. Blockchain is not the big thing that everybody thinks about and that's going to solve everybody's problem. We're not going to go into the specifics around blockchain, but today, my company, Cambridge Blockchain, we're implementing a software in Luxembourg that will work around the system where we created a PDS, a personal data service, comes in the form of a mobile application or a web application. And it holds all of your personal data and attributes. When you want to open a bank account, you'll have your first bank account. You'll have a bank, let's say in Lebanon, Biblos Bank, that will act as a trusted party. They will ask you to send them a copy of your ID, a proof of residence, and all these documents. You'll send these through your mobile application or your PDS. Then the bank, Biblos Bank, will have to go through this very lengthy and very cumbersome process of data validation. They'll have to make sure that the data they've received is actually flawless. It has not been tampered with, it has not been stolen, and so on and so forth. Because in Lebanon we see a lot of these cases, unfortunately. So they'll have to go through this vetting process before they actually do your KYC, before they actually decide if they want to accept you as a customer or not. This is what's been being done in all the countries in the world. And then and this process takes many weeks. So then when you want to open another bank account, you have to go through the same process again and again and again, while opening different bank accounts, or even in the same bank with different services, to take a loan or to buy this product, and you have to go through the same process again. So where blockchain comes in is that this bank will go on a private blockchain, so it's a centralized entity, and will write down an attestation of every validation they make. So it's a hash. If you want a cryptographic proof from which you can never go back to the data itself. So there's no data there, just a hash. They will write down this hash for every validation they make. Then you want to take a loan at Blum Bank. Blum Bank will ask you for the data itself. You will send it again to your PDS, and instead of them going through the same process that takes hours and weeks in some cases, they will just go on the blockchain, compare the data they've received against the hashes that are there. When they see that they match, they will know who checked what and when. They'll know that Biblos Bank checked this data at this time, this date. Maybe they trust Biblos, maybe they don't. So they might want to do it themselves. The whole thing behind it is that this system can work, and you can improve the whole customer onboarding process and the KYC processes. It's not a theoretical thing or a pilot or a proof that we're still trying to think about. This process is being implemented as we speak in Luxembourg, a small country, that's true, that has a very big financial inclusion. But you have also other countries like Bahrain, Jordan, Saudi Arabia, just to talk about the Middle East, that are looking at such projects. And I'm glad to see that also in Lebanon, we're looking to experiment such things.
Thank you, Nadim. So to summarize, I think what they're doing is they're using the blockchain as a chain of trust, so that if you validate in one bank, you don't have to validate again. It simplifies the process of validation and simplifies the customer service and opens up the trust of things. But you also mentioned central databases. And Antoine, I'd like to ask you about, well, we still have a central database. Do we have to have a central database, and what are the risks of doing that using blockchain? And if there's anything you want to add to what Nadim said as well.
Now, okay. So basically what blockchain does is it's a database, but the database is replicated across multiple parties. So if you have 5 banks participating in a KYC system, these 5 banks have the same database, which is essentially these attestations, the signatures of the existence of documents that were vetted by people within companies. But very often the service providers need to keep copies of original documents. So in the case of a bank, the bank probably needs to keep a copy of your ID or passport. So these kinds of documents will stay stored within the databases of the banks, but they'll be within a framework of work. So instead of collecting these documents at the teller level and then escalating them to different sorts of departments within the bank and then copying them across different also servers and nodes, you have a specific way of working with things. So blockchain helps in the sense that you can go through the KYC process once, best case scenario. So you go to the bank, they ask you for your ID, someone checks the ID, they trust that this ID hasn't been tampered with and sign on behalf of the bank
saying that this document was checked by us and we think that it's actually legitimate and can be, and a signature of this can be used in the future to bypass this KYC process and actually give the customer what he wants. Now, if you go to another bank, the other bank, to the extent that this other bank trusts the first bank, they can reuse the same attestation to actually verify the claim and make sure that the person has went through the KYC process. But in order to do that, the end user, the customer of the bank, still needs to produce his ID and provide it to the bank. Then the bank can take this ID, hash it, go through the same cryptographic process, and compare this to the data that's in the blockchain. And if this data matches, then the bank can say, okay, this other bank checked the same document 6 months ago, it's still valid, we trust it, let's not go through the process again. But the need for storing the IDs is not going to go away, like realistically. There are some scenarios where we'll stop storing specific kinds of documents, but in the case of core documents that are used for different sort of things and for regulation in general, they'll still be stored. Do you agree with me?
Yeah, I totally agree. And when blockchain came in, we were thinking this is this decentralized system, and we're not going to need a middleman, and the banks and the central bank are all going to disappear, the government's going to disappear, and we're going to just work next to the blockchain. This might be a good idea. I'm not sure everybody agrees here. I don't have a specific opinion about that, but this is not the case here. Everything that we need to do, and this is why banks and financial institutions worldwide have started to embrace technology of blockchain. When we're thinking about a digital identity eKYC utility project, having a centralized government-owned entity like the central bank is key. It's key to bring along all the stakeholders, all the different players, the whole governance system. It's key to put on this process the whole framework and the regulation, because we still need regulation, we still need to make sure that bad people cannot access, at least easily, financial services. And so blockchain is not gonna just decentralize and break our world the way we know it. It's just a tool for us to create more security and more trust between players that don't necessarily want to share with each other their KYC systems or their validation processes, and can do this in a trustable manner.
So, Ajib, is the central bank ready to start doing this? And
actually,
to Raful, are you comfortable with having the central authority doing it? And then the others.
Actually, today it's working like this. Today, the new program that we launched lately about the central libraries, from the branch, you have a customer onboarding. You just put the name. The problem in Lebanon, we don't have a unique ID number. The search is so difficult. For example, Dr. Shaya and Shah, just a Shabbi will differ from a name. So figure out a person called George Khouri. You have thousands of George Khouri in Lebanon. How to identify the client? We don't have a unique number. What we did in the central bank from the moment that I came, we create a unique number to the client that will stay with him his whole life. If it is a moral person or a physical person, he will have his unique number. Now, the problem is not to identify, because we identify, we bought the election list, and we validate the data that we receive with the election list, because we receive a lot of fraudulent ID, a huge number of fraudulent ID. So you have to check those ID before you put it in.
So having a centralized database and the latch so that we can centralize helps us protect from criminals and fraud. But there are also some privacy issues here. Right?
Exactly. That's what I was going to talk about. GDPR today, it's a big issue.
And so part of the things you need to deal with, Raful, is GDPR and the right to forget, and hacking, as Nadeem was mentioning. How do you deal with it? And how can we deal with that? And maybe Antoine and Nadeem can jump in as well.
Just to add to what Najib said first. the ID, the Lebanese ID, does have a number on it, and we just recently discovered that it's a unique number. So if you lose your ID and you want to issue a new one, the same number gets issued. And the Ministry of Interior confirmed that the ID number is a unique number. So therefore but no one used it. So now we're trying to say, if everyone uses this unique number to identify the person, then you can look them up easily and you'll avoid duplication when names are similar, even birth dates are similar. So that ID number is now pushed. Even the government has issued a directive last year asking all government institutions, departments, to use the ID number as a reference whenever they want to do an official transaction for the citizen. But till now they haven't. But it's there.
So the unique number.
They're trying to push everybody to use it, and that's important for everyone to know. There's a law, but it's not yet in practice. But hopefully it will get there. It will make our job easier, make the chief's job easier.
It will definitely make your job easier. But I'd like to warn against having a unique ID to represent your digital identity. And the social security number in the US.
No, won't necessarily be the digital one.
Yeah. I'm just saying that, but still, giving power to a number opens the floodgates to identity theft, because people tend to trust a number, and this number should be private in general. No, not everyone should have it. And like everyone in the US that works in the space of digital identity will tell you that the social security number is the oldest thing that you remember, and it's the single point of failure of the digital identity infrastructure of the US. So we definitely need centralization, as you said, and I'm sure you're doing a great job at centralizing.
Centralization, building relationships with the client is what really matters. Then you can really vet for him.
Yeah. Now, from a blockchain perspective, what you could do instead of building a relationship is create something called a smart contract that stays on the blockchain, and this could behave as your relationship with the customer. So, and this is replicatable. So instead of only being able to work with you, I'll be able to work with any person who recognizes this relationship between the two of us. So what I'm saying here is that centralizing and digitizing is great and it's a necessary step, but we should be careful when it comes to sensitive information such as attributes that make up your identity, especially like when we live in a world that's completely digital and where digital fraud is so easy to do these days compared to.
Just to jump on everything that has been said here, and I want actually to say this just after what Najib said. I think when we're talking about identity being unique to a user, we're not necessarily talking about just having this number. This number is one first thing. This is, so
out of 30 fields, I have 32 fields. It's one of those.
It's one of those fields, and it's very important. But you know, the way we see identity, there are 4 key components, or the 4 P's that are very important. The first one is personal. It has to be unique to a user. It has to be persistent. So it has to, you know, your identity has to be created when you're born and then die with you at the end. It also has to be portable, and I think this is where there's still a lot of work to do here. So you have to be able to use your identity. So everything you are, all these attributes, everything you represent, you have to be able to use it anywhere in the world. And it also has to be private, so it has to have the necessary amounts of security. So, and being able for you to be able to share it and to consent into sharing it. So we're again into you owning your own identity and deciding who you want to share what with whom.
Exactly, and that's what we do. No one can access this data unless they have the approval of the client. And we have a team of supervisors that go and supervise the banks to be sure that no one has seen your identity without your consent. So consent of the client, it's a must. No one can access this data unless he has the consent of the customer. The problem we have, excuse me, Yusuf, the problem we have in Lebanon is we don't have a law for retention of negative data. And that's, as the head of the bureau here, I have it, it's a big issue. It's a big issue.
So I have 2 questions, and I don't want to hold you too much, but for all of you, and let's keep the answer short. So what I'm hearing is that we need the digital identity so we can have the private information, so we can build that trust and build the relationship. And that's a very complicated process. Having a digital identity helps us streamline that process, helps us validate the trust and build the relationship. And then the first time it takes you half an hour, the next time it's portable, take us 5 minutes. My question is though, does it have to be centralized? Why can't it be distributed, especially with the use of digital technology and digital blockchain? If it doesn't have to be centralized, why should it be centralized?
So, again, I come from a startup, so ideally, we wouldn't need, in an ideal world, a centralized entity, and you could actually build such a project worldwide in all the countries and have a interoperability between all the banks in all countries. In the real world, this does not work because every country wants to have its own national EKYC utility. I'm going to give you an example. We're doing this in Luxembourg today. Okay, so we're going live. This technology is very difficult to implement. It took us more hits and more time than we wanted to, but we're going through with it. There's the same project in Belgium. Luxembourg and Belgium are basically two neighboring countries, very, very similar culture-wise, and a lot of people that are living in Luxembourg are actually Belgians. And Belgium has more or less the same project that they want to implement, but they're not accepting to use either the same platform that has been built or any of the technology, the exact technology that has been built. They want to build something from themselves. So when we're thinking about just two neighboring countries that have no problems between each other, that still each one of them want to do their own thing. First of all, so this shows that we still need to do this today, at least on a national level. And the most difficult part about this type of project is to bring all the players around the same table. So for a company or a startup to go see every single bank and say, hey, we need to do something together, we need to build this thing together, it's very difficult.
Well, actually, in my view, if you had a decentralized process, getting all these people to agree who that centralized entity is and what the properties are and what the safety is harder than using technology that allows you for decentralized decision making and not need this thing. So what am I missing?
The thing you're missing is this is totally right, and this is basically what I'm trying to say.
Baby steps.
Baby steps.
First of all, yes, baby steps, and we're still far away from the end goal. And we're building a decentralized system within a central entity that manages the whole governance and the structure of the platform.
Najib, you said you wanted to say something. Yeah.
About centralizing and decentralizing. Today in the European Central Bank, they have ANA Credit. ANA Credit is a central public credit registry of all the public credit registry of Europe. So today, if you don't have a centralization, you cannot get the group of the people in our work in the banking sector. A company can take a loan under this name and another loan under the other name, and etc. So you need to have the group list. And today, if you are a company and want to deal financially with the Europe or the state, you have to have a global legal entity identified. So we always go back to centralized.
Do you have anything to add?
Theoretically speaking, yes, we can have it decentralized. And you can do all this without a central authority, but in theory, in practice, it's a long way to get there. So whatever we do today to automate what we have and to make it more efficient is helpful and is achievable. Getting to a complete distributed ledger where there is no central authority, it's actually very energy consuming. So blockchain as it works today for the digital currencies, it's very, very heavy energy consuming, and it's not sustainable. So it works for small volume activity.
I'm sensitive to everybody's time, so let me just summarize and then maybe open it up for a couple of questions. So if I get it right, what we're saying is to do business and to save us from bad people, we have to store and manage private data. And then we have to build relationships and build trust on that and see who trusts it. But we're saying we need central authorities to do that. So we kind of, but the way we protect the privacy is by using hashes and blockchain so that we're not storing the actual information, but we're storing things, meta information. So that, I don't know if I feel comfortable with it, but what does the audience think? Any questions?
Hello? What a pleasure to listen to you guys. I have a question and I guess an observation. Correct me if I'm wrong. Lebanon is defined as a community or majority community-based banking system, which capitalizes on soft information. And something that you brought up earlier, Mr. Najib, was that we wanted to discuss more financial inclusion. The theory suggests, at least, that soft information community banking are actually better, inclusive financial systems than hard-based banking systems. Now, I know we're moving towards the 21st century, we need to move on, but do you think that there's a contradiction when we move towards these harder forms of information and we start relying less on the soft information for relationships between bankers and their clients? Do you think we're going to lose that edge and are we going to hurt financial inclusion by moving towards the system?
Yesterday, a friend of mine took a personal loan, small personal loan of $6,000 US. He had to sign 150 papers. It's not his first time that he took this loan. So, so the idea about the digital ID, it's to simplify and time-consume the process of onboarding of customers. And to take a small loan, a credit card, you don't need to have to spend the whole day in the bank. You can do it from your mobile phone if the system recognizes you. The problem is, the system needs to recognize you. And you are not a bad people. You are not on the OFAC list. You are not on. So to be able for the system to recognize you, you have to have your data in this system. That's the idea. The problem, we have two issues. First of all is the security issue, cyber security. And what we did is we have direct contact with each agent that can access. We give them a special device and a kind of credit card with a PKI PIN code, so it's very secure. Anyway, I think it's very secure. Plus, there is a team of supervisors that goes and check each access. We have at the end of the day the access of each bank, each branch, etc. And there is someone who go and check who is checking whom. So in a way, it's kind of secure. The other problem that we have is the new law of GDPR in Europe. So that's why we're working on it, because especially in Lebanon, we have some private information companies that do give information about people. This one we should figure out.
It's a combination of technology.
Yeah, exactly.
One more question.
I just want to ask Mr. Nadeem and Anton as well. From the old speakers that talked yesterday and today, it seems that technology is problematic in a way, and it's not solving or simplifying our lives. Nothing is secure. There's nothing guaranteed. We started with a company in India. Half of the citizens are breached and they have leaked their information. Just one question: is there any ability that our DNA or RNA would be simplified to access this technology? Safe, it's going to be more safe. Nobody has the same DNA, nobody has the same RNA. Everything is Google.
The thing with so using the DNA is a biometric form of authentication. It's like using your fingerprint. The problem with these types of authentication methods is that they're irreplaceable. They're not like a password that you can just change. So if it gets compromised, you don't have another set of DNA that you can use to re-authenticate yourself against another system. And that's the biggest problem today in implementing biometric authentication at a large scale. Adhar actually in India used a deduplication algorithm for fingerprints. So they actually tried to use fingerprints against these. But this information was stored in centralized servers. And whenever you do that, you open yourself to breaches from internally, from employees, and externally, from hackers. So systems that tend to be centralized tend to be very appealing to hackers, and they want to get into them. Password is still simple, because you lose it, it gets compromised, you change it, it's okay, you can continue using it, but breach for a specific period of time until you changed it. But something that's so unique, so unchangeable, so immutable, such as a biometric or a DNA, a fingerprint, a face scan, anything, it's very difficult to change. So that's why you can't deploy these sorts of authentication protocols on your scale.
But in some way, it's a way today to authenticate you and identify you for any type of service you want to use. But I don't know if you've watched the Mission Impossible movies, at least some of them. In any case, it can be hacked. You know, today or later, you know, any new technology at some point it will be hacked. But then you have newer technologies that will come. And this is how it works. So we just do at the moment today with what we have, and if it's working today, then we go with it, because there's no way to know exactly what and when this is going to happen. And
to add that the DNA data, even though it is concrete data that you can test now, you will know who you are, assuming that an authority did the DNA test upfront, but has to store the data in a super protected database, and can only be accessed by very restricted people. But it cannot be something that you go and test yourself to validate yourself on every single transaction you do or any relation you do in the world. As you said, because you're compromising, that data might be compromised, and then your DNA will be known for everyone. And then they will find out some way to replicate this data and say that they are you. So DNA is very important when it comes to criminal court, to really prove that this person wasn't the person that was on the crime scene of crime. But to use that for everyday life, it's not recommended.
In Ukraine, they use the facial recognition to identify the client. So that